I am Karen, and I am one of the co-founders of Blockchain by Women. We started Blockchain by Women to increase diversity, as well as inform and educate on the latest developments in the space. And I'm very happy and proud to say today we are joined by a number of exceptional experts in the blockchain space, and I'll let them introduce themselves. And but before I continue, just a quick background on me, so you have context. I also started a company called BlockchainIntel, which does regulatory reporting, compliance reporting, and helps identify fraud. We recently joined Appdome, which is a security company. So we'll talk a bit about the fraud and other types of security risks. But I wanted to first preface with this year has been, or last year, sorry, 2020 has been a banner stellar year for DeFi and crypto. This is the second panel that we're doing in a series on data-driven investing. The difference between this panel and the previous one is that this one will talk more about digital assets and the execution. And so we'll do this from a retail, corporate, and institutional perspective. So I'll let our esteemed colleagues here introduce themselves to give you an understanding of what their perspective is. So Tavana, do you want to start? Oh, Tavana, you're on mute.
Uh-oh. Hi, everyone. I got hit by the mute bug. My name is Tavana Evans, and I'm the founder of Guapcoin. I am a data scientist, developer, engineer. I've been in technology for almost 25 years now, from enterprise to government to just plain old consulting. Currently right now, I'm spending a lot of time with Guapcoin, getting that project off the ground. Thank you.
And B, thank you.
Thanks, Karen. I'm B. O'Carroll. I am the CEO of an OTC trading desk called Nautilus Tech. We trade digital currencies versus fiat for individuals and corporate entities. We're based in New York.
Ombre.
Hello, good evening, good afternoon. My name is Ombre, and I'm the CEO of a company called Kaiko, and we provide market data infrastructure for institutional investors in the crypto assets space.
And Christine.
Hi, everyone. I'm Christine Sandler, and I am head of sales and marketing for Fidelity Digital Assets. It's Fidelity's institutional digital asset offering.
Thank you. And Angela, thank you for making, I know there were some challenges, but thank you so much for making it.
Thank you for having me. I'm glad I made it in time. I am the founder and CEO of Signum Growth Capital. We are advising and investing at the intersection of blockchain and disruptive entertainment. Think video games, really new digital economies in the metaverse. We also, one full-time job is advising the Web3 Foundation on all things Polkadot, and the other is advising ARK Invest on all things ARK Invest.
Great. Well, thank you all. It's exciting to see all of you here and sharing your perspectives. As a disclaimer first, we are not providing investment advice, so please consult your investment advisor if you have any further questions. We're just sharing our perspectives. And second is, if you have any questions, please enter them in the chat window, and we will do our best to answer them as we go along in this discussion. And certainly we'll answer any questions at the end. So what we want to do is first start off with, what has been happening with the crypto landscape? How has it changed? Is it now more geared towards traditional finance, since we've seen a whole bunch of financial institutional investors come in, as opposed to the people that Bitcoin was originally intended to serve or idealized to serve? So to answer that, do you want to start us off, Tavana and Angela, and share your perspectives? Oh, Tavana, you're on.
I know. Definitely, we I think a lot of us predicted where it was headed, and 2020 kind of sealed that. And that is, of course, yes, the institutional takeover of Bitcoin, like some of us like to say. But, and, you know, some of us blockchain purists definitely have kind of sat to the side and seen the beast that we did not want to happen. Because yes, it is like a slight deviation away from the pure principles of what this technology was supposed to do for the average person. So we are seeing I guess you could say a metamorphosis of it becoming just another institutional asset.
Yeah, I would just add to that I think back in 2017. There was a lot of hype, and the Bitcoin rally was really driven by retail. At the time, I was at Guggenheim, and I was, I always say, shouting into the forest about Bitcoin, and largely institutional investors and people who, I would call smart money, thought that it was tulips, and kind of a bubble, and it proved to pull back quite a bit. I think the buyers that I'm seeing now are more, even if they're individual institution, even if their institutions aren't coming in full force on Bitcoin, the individuals themselves are, and actually, ARK Invest did have a big ideas report out today, and they did an analysis of retail versus institutional, and they estimate that only that it's a very small amount, about 15% of the peak of Google searches that we saw back in 2017 we're seeing now. So around Bitcoin price and kind of retail oriented words. So I do think this is led by institutional investors, even if not the institutions themselves, and I think those will follow.
That's great. So then do you guys think that we won't see, or we will continue to see, the massive, ups and downs and volatility in the market?
Kathy?
Happy to take that one. I just want to expand on one thing. I completely concur with the fact that the industry has fundamentally changed in terms of retail versus institutional interest. If you compare the 2017 bull run compared to the one that happened last year. And that's also, I think, driven by something fundamental in the narrative around blockchain and crypto assets. I think that in 2017, it was a retail market, and the general perception was it's a way to make kind of a quick buck, but also it was still seen somehow as like the drug money. That was the view, I think, the perception that people had. It was some kind of obscure cryptographic anarchist asset. Whereas now the thesis is more around hedge against inflation, alternative assets, diversification. I think above the fact that I don't know if it's the chicken and the egg thing, the change in the narrative, I think, attracted more fundamental investors, people that had a different view and a different perception on the industry. And that is positively impacting blockchain assets, not just crypto, but also just the understanding of the technology and the willingness of large financial institutions to invest time and resources into really understanding what's underpinning, not just, hey, let's look at the price from a pure return perspective, but more at let's try to understand the technology and what we're investing in.
Great.
Can I build on that as well? I think that it's clearly the global macro narrative has really taken hold, and that's that we've seen since kind of the beginning or the first quarter of 2020. But you're also seeing a couple of other kind of main obstacles, which have been prevalent obstacles that we've seen in the industry kind of begin to chip away, whether it's regulatory ambiguity or career risk in terms of making that investment. So you're starting to see a confluence of factors contributing to this already strong narrative. And I think that is also something that's driving investors to this asset class. And it's, quite honestly, at the end of the day, it's also, it's a bet with an asymmetric potential upside with something that has a venture component to it. So if you're thinking you're plugging into an ecosystem that's fundamentally different, And I do think that that also has just fundamental appeal to the folks that are entering this space.
Absolutely. And in some way, what happened with COVID and, you know, the fact that central banks had to print trillions of dollars of money was somehow positive in terms of the understanding and the I guess at a wider scale, the need for an alternative to a status quo. We're still far away from that fundamentally changing the way finance works, but I think it shed some light on dysfunctions of the existing system, and the fact that even small in terms of the sheer size of the crypto asset market, it is proposing a different way of thinking about finance and money and the issuance of money and who has control over all of that. So I think somehow the crisis did benefit blockchain as well and has helped in the acceleration of the interest and understanding of what it means to run a blockchain.
You know,
If I could, oh, sorry, go ahead, Angie.
I just wanted to add one more thing, which is kind of related to the macro or, you know, kind of policy backdrop. There is, you know, obviously we're entering a new presidential term in the US, and it's very rare to find both sides of the aisle agreeing vehemently on really anything, but they definitely seem to be agreeing on big tech and, you know, the whole kind of antitrust enforcement that could be coming finally. We've been talking about it for a few years, but that's definitely heating up, and I see it as very bipartisan. So that also lends itself to, I think, blockchain networks, self-sovereign, decentralization, and a lot of the themes that drive blockchain.
Yeah, absolutely. I totally agree with that. There's never been a bigger case of 2020 for ownership of one's own data and ownership of privacy ownership, et cetera. And we all know that blockchain is the underpinning of technology that provides that ability coming in the future. So it lends back to, I guess, another use case of blockchain, or the original use case of e-currency was privacy concerns. So yeah, absolutely. That's a big push for people now. It's like, I think that was more towards the close of the presidency. We still haven't seen the fallout yet of the privacy or, you know, freedom of speech issues or whatever the case may be, and blockchain, and just being able to use blockchain for governance.
I think at a really basic level as well, we in the early days did not do a fantastic job at being clear and concise and articulating what the heck any of this is. And I think the biggest difference that I've seen today versus 3, 4, 5, 6 years ago is that there are more forums exactly like this. We're doing a much better job at explaining, what is this? What are you buying? How the heck do you buy it? And the language around it is not as clicky or exclusive, and I don't need to be like in this particular chat with all of these guys, like, right? It's much more accessible. So the conversations I have with friends, family, people on the street via a mask about like when Bitcoin comes up, it's not like it used to be, oh my God, I don't understand it, I can't touch it, I don't know anything about it, don't talk to me. Now it's like, oh, yeah, all right, I have a Coinbase account, or I know what a wallet is. Like the fundamentals are there for a lot of people. The themes that Angie and Tavania just mentioned, and Christine, like, these are real themes that people can grab onto. So I think that it's kind of dropped into a different level of the psyche for everyday people, as well as people that are in decision-making roles at corporates and institutions.
So Ombre, just so thank you all for your thoughts there. So shifting to that point and continuing that, Ombre, what are the on-chain and off-chain metrics? What are the metrics, you know, going into, okay, what is it that people are now measuring? And now that they have this baseline understanding, what is it that they're looking at now, given your company and your customers? How are they, or how are you seeing they evaluate blockchain protocols and assets? And you know, are they looking at particular measures like transfers between addresses over time, or specific things like liquidations, order book depth, funding rates, and so forth?
Yeah, absolutely. And I think you just put your finger on exactly one important distinction, which is between on-chain data and off-chain data. So on-chain data is everything that you can basically gather from looking within a blockchain. So let's say I'm looking on the Bitcoin blockchain, I can see that Ambre has sent one Bitcoin to B or to, and then B has sent it to NG. We can see all those flows basically of a specific Bitcoin moving from a wallet to another. What you do not see is the counter value or the whatever has been given in exchange for that transfer, right? So maybe I'm just really kind and I like NG enough to send her a Bitcoin without any counterpart, but knowing that it's now 40,000, you kind of want to know what am I getting in return. So it's very important to, first of all, understand the difference between on-chain data and off-chain data. On-chain is really, I'm looking within a blockchain and I'm understanding the flows, and also, alternative data such as hash rate and mining difficulty and all the information that is tied to creating blocks and moving information and balances around. And then there's what we call off-chain data, which is what I do at Kaiko, and this is looking at exchange data. So looking at the marketplaces where actual trades happen. B is obviously on the OTC side, so on things that do not happen on exchanges, but similarly, she looks at people that are exchanging an asset for something else. So the information that I have is something like, hey, how much did that person pay for a Bitcoin? How much did that person pay for an Ethereum, etc. And so on the on-chain data, the interesting metrics to look at is also the amount of people that are holding their assets for longer than a specific period of time, for example. A great company and who's publishing great research around on-chain data is Chainalysis. They've recently published something to explain the bull run, saying that actually it's just a shortage in supply, because people now that are moving coins around are generally active traders, and all the people that have held their Bitcoin for over a year are still holding on to it. So long-term holders, or hodlers as they're called in crypto, are not willing to sell because they see fundamentally that there's so much more upside, and they're not willing to part with their Bitcoin at current market prices. And you have new entrants that actually say, I want to get my hands on Bitcoins, and you can see the shift in the velocity of trades happening from what is called traders accounts that have been moving around cryptos a lot, and what is called hodlers account, which is people that are actually holding onto their Bitcoin for longer than a specific period of time. So this is really an interesting metric to look at when you think about the activity and the nature of the activity on chain. And then when you look at off-chain data, interesting metrics are, you just mentioned it as well, Karen, order book depth. What is order book depth is basically looking at offer and demand. So very often when we think about crypto prices, we look at prices. We look at what prices are transactions executed, and we say, okay, the volume today was X million dollar on that exchange, X million dollar on another exchange, and that is only taking into account executed transactions. So things where people have agreed on a price and exchanged value. However, one thing that I've put a really strong emphasis on since a few years now is really looking at what's called the order book data. And the order book data goes a bit further and beyond the actual trades happening, but it's looking at the market structure and the depth on both sides, on offer and demand, and seeing the imbalances between supply and demand, and seeing how much volume is actually placed on those order books waiting to be executed at different market prices. This is fundamental, I think, to understanding the structure of crypto markets. And this is something very interesting on the on-chain data side. A couple of traditional metrics that are used in traditional finance and that we can apply to crypto markets are things such as bid-ask spread, so the difference between the highest bid and the lowest ask. The narrower the spread, the more efficient the market and the more active you will see trading activity at the intersection of demand and offer. You can see stuff such as slippage. Slippage is how deep is the order book and how stable the price is for any given order size. So this notion of price stability is a very strong indicator of the efficiency and the liquidity of crypto markets. Very simple example, if I want to buy, let's say $100,000 worth of Bitcoin and the price currently is 40K, if my $50,000 order is going to significantly move the market, it means that it's not a very deep market, right? It's going to impact, if I come up with more demand, it's going to significantly move the price. And that is a strong signal of how efficient the market is. So those are the kind of metrics that we look at from what we call liquidity metric perspective, are all those indicators of market structure, market depth, and efficiency crypto asset, but this is purely from a quantitative perspective, right? It's really looking at prices, offer and demand, and not looking, as you said earlier, on the on-chain side as like inflows and outflows and market behavior, I would say, in terms of who trades what.
Yeah, and so that's where I think something that Tavana and we worked on at BlockchainIntel was to understand adoption and really are there transfers between wallets, and what does that look like over time? Because you want to see that kind of activity. Otherwise, it's like, okay, just a few transfers between who? Is it just, a few stakeholders at the top and nobody at the bottom? And that's not a healthy ecosystem either, right? It may be lucrative for some traders, but that's not a healthy ecosystem. And so on-chain metrics are important in that respect to understand really what is going on.
However, there's one thing that is often overlooked and sometimes misunderstood, and I'm saying that for the wider audience, is that what happens on exchanges is not reflected on chain. So if I create an account on Coinbase and I buy Bitcoin, it's not going to be reflected on the blockchain. It's not going to be reflected as a new wallet on the blockchain. It's only going to be in the centralized ledger at Coinbase or Kraken or wherever I've created an account. And this is really important. There's this notion of centralized exchange versus decentralized exchange. And today, the data and the trading activity that takes place on exchange is really this off-chain data and metrics, and is not reflected on when you look at number of wallets and things like that on-chain data.
Yeah, and that's exactly what we've seen a lot of discrepancies is there's on-chain data that says, here, this is so much money that's going, or that's being exchanged, right, in a particular coin. But the exchanges will inflate the numbers, obviously to their benefit, and that's something to watch out for, right? When you're deciding who to go.
They will settle, or they will settle in bulk, right? They will have their own internal ledger of all the trades happening, and maybe once a day or once a week or whenever they will settle on chain for a large portion of the assets that have been either sent or transferred in or out of the exchange. And so you might see very large kind of bulk transactions coming from exchange wallets that represent thousands, if not more, of different smaller individual transactions.
Right. But I think the key here is the numbers do have to add up to some degree. And if they don't, then there's a red flag that should go off. Now, I did want to switch over to the execution side since we're talking about exchanges now and the differences between DEXs or decentralized exchanges and centralized exchanges. So just want to go through the panel here and have you guys give us your perspective, because there's many different options. There are risks like we just talked about. There have been scams. There's been enforcement actions against certain exchanges. Does the risk of an exchange or a execution option factor into what you decide as an investment vehicle? And are there metrics that you use to understand the risk associated with an execution option? But if we just take a step back here, if you guys could just lay out all the potential execution options, especially since it's gone from just a retail, say, focused market now to institutional, small business, and so forth. If you guys could just give your thoughts on the execution landscape. And do you want to start, Christine?
Yeah, sure, I'm happy to. So given the fact that Fidelity's client base is mainly traditional investors that are coming from other asset classes, they have expectations around what the market structure might be or access to liquidity. So the expectations are that they will see a centralized limit order book, and that will reflect real-time prices, and those prices will be essentially actionable, when that is, as we know, not the case. So we know that 40% of the market trades essentially in a completely opaque fashion. So the expectation is, how do we help them get a good execution with knowing what we know about the quality of the execution venues that we connect to, and then the risks associated with other execution venues as well. So essentially what we do is we act as counterparty to the trade, and we connect to a smaller portion of execution venues than the entire marketplace, because our concerns are mainly regulatory and counterparty risk, and that's reflective of our client base. But at the end of the day, I think is almost a mismatch between what exists in terms of the overall ecosystem and the infrastructure that we've built and the expectations that some newcomers have with respect to the space. So even measuring that quality can be difficult. And so that is something that we hope to help close the gap over time and have greater transparency with respect to the execution process. So.
Thank you. And B, could you offer your perspective on a market that's different that you serve from Christine?
Sure. So we act as principal to all of our trades. So similar to Christine, we are a counterparty. So I'm evaluating all of the platforms that I'm trading on constantly with the view to the fact that the number one risk to my business is my banking relationships, right? That is apart from Bitcoin's price going to zero, which I think everyone, by virtue of the fact that we're here and we've bet our livelihoods on, that's probably a very low risk. The next biggest risk to my business is my banking relationships. So to make sure that I keep those in good standing and everybody's happy with me and I'm on the good list, we have to make sure that we've done our due diligence on where we're trading. So obviously it seems to go without saying, but because now we do have the whole decentralized world that's come up, like we have to make sure we're on a platform that has KYC, AML, and robust policies that are enforced, right? Number one. Number two, I need to make sure there's liquidity there, because otherwise, unless I'm strategically picking something that's only traded on like one small exchange, why would I go there, right? I want to make sure that, as Ambre pointed out, that there's depth there, that I need to manage my slippage, right? I'm taking into consideration all of these factors to make sure. Number three is, for me personally, is support and client support and responsiveness. So because our industry is really new and everything's evolving, when there are days of very high volumes, pretty sure anybody who's been trading anyway actively over the last couple of weeks noticed that the exchanges have downtime, right? There are outages. I need to know that if I have a problem with a trade, I can, in one phone call, get to someone who's going to resolve my problem. So that's also like being able to be in communication with people is exceptionally important.
Angela, can you offer your perspective from the traditional investors?
I think you're on mute, Karen.
Oh.
Oh no, I'm not. In terms of, I think I will defer to B and the other experts on this. I'm not, and Christine, obviously, because I'm really more on the advisory side and not on the execution side and investing side.
Okay.
I wanted to add something. Although I'm not so much on the trading side, of course, naturally, but I am always working on exchange, building exchange and stuff like that in the background. And I feel you mentioned decentralized exchanges, which are more of a traditional avenue for accessing crypto. But I guess the biggest problem, the decentralized exchanges have had a problem for a long time, and that is education. Nobody really knows how they work, and they don't realize that they even work differently from a centralized exchange. And that's become their, I guess, their Achilles heel, marketing. They have no marketing or no education. But I wanted to bring it up because I do think that in the future, they are going to be there. Obviously they are. I mean, nobody really wants to go back to the banking system, which is why they left in the first place. So, so in the future, decentralized exchanges are going to have a very, very good place, and especially with DeFi and everything else that's going on. So I wanted to make it clear. I didn't want it left out of the conversation, even though it suffers from really just an educational issue where, as like I said, nobody knows what they do and how they work.
And if I can add on what you just said, Tavonia, I think I like to say that DeFi and DEXs is a nice sandbox to see what could happen for the more traditional capital markets industry, just because it works. It just works. Like, there's nothing we can say about the fact that people have been issuing securities and lending and creating derivatives, and all of that trading happens on decentralized exchanges, no central counterparty risk. Like, it's just fascinating to see how big this industry grew from pretty much nothing over 6 months ago to what it is today. It's still very small in absolute numbers, but it proves that the technology works. And I think it puts some lights on how blockchain may down the road really transform fundamentally how capital markets work and how we represent ownership of assets under a digital form. And not only that ownership, but also the transfer of that ownership to another party in a completely decentralized, effective, cost-efficient, auditable, transparent way. And that is, I think, scary for traditional financial kind of participants. And it's also an incredible opportunity. And I love to see all these new participants that are not just looking at crypto from like, it's a cool quantitative financial trading bet, but also we need to get a step ahead here because this is going to either kill me if I'm not, it may be dangerous, especially for exchanges. I love the fact that decentralized exchanges work. I think it's fascinating to see.
Yeah, I'm sorry.
No, go.
To add to that about not knowing how it works, that's important for institutions. Institutions need to be able to explain to their constituents how it works, which is why they're not using it. If they can't explain how it works, no one wants to put their money there. So again, they're going to be up in their game, I'm pretty sure, in the future of getting their education. I see all of these gaps in times as people get in their education. From 2017 to 2020, there were 3 years where the institutions were getting their education on just the basics. Now they're going to be getting their education on decentralized exchanges and DeFi for the next 3 years.
And in a sense, Bitcoin is serving as kind of that entree vehicle. So they're getting, many of the more traditional institutions are getting accustomed to the overall ecosystem by just interacting with Bitcoin, simply Bitcoin, on regulated exchanges. And it's bringing them to a level of awareness right around the underlying technology. And Ombre, as you pointed out, that this is a real-time sandbox. I mean, these are proof of concepts that are playing out in real time that are very challenging to the central core functions of kind of traditional finance. So it is an absolute wake-up call. And look, I think you will have both sides of this kind of playing out in real time, whether it's poo-pooing it because of a lack of governance or highlighting it because of the freedom of expression and the level of empowerment. And I absolutely cannot wait to see what happens with respect to the evolution of DeFi. But I'm telling you, we're getting questions about, hey, can you explain what DeFi is? And it's not just because of the enthusiasm around the underlying protocols. It's really about like what these protocols can actually affect. And that is magnificent, really.
And Angela, did you want to add?
I was just going to add that Christine and Fidelity have been, it was very prescient to focus on Bitcoin because it also is the only thing that we know. We are 100% sure it's regulatory compliant. And for an institution, that is so important. And so they're not going to dive in. I think they eventually will dive into everything else, but I think that it's going to take some time in terms of wading into the waters just with Bitcoin to really be able to feel fluent enough and confident enough to reiterate what Tavania said, to be able to explain it. I mean, if you can't explain it, you definitely can't get your LPs involved in something like this.
So I wanted to return to the retail side of things. I know we do have retail investors in our audience. So Tavana, can you kind of share what you've been seeing, especially given the community that you've been developing with Guapcoin and some of the new innovations in that area?
Yeah, absolutely. I definitely want to highlight on my side because our audience, I think, is probably as close to the core audience, just the regular, other 99% that haven't gotten involved in here yet. And I get calls every day and emails every day. I hate this exchange thing. I just want to get some Guapcoin. I just want to do this. I don't like this. This is not what I want to do. So that's a problem that we're working to solve. And we're trying to return back to the whole peer-to-peer. What is this about? This is about peer-to-peer transactions. So there has to be a peer-to-peer solution clearer. Of course, there's decentralized exchanges, but they're still an exchange and they still look as intimidating as the other exchanges. So you send, the people that I know there, they're still saying the same thing. They don't know the difference. And they know that it's overwhelming. So I think that there's going to be another huge development or huge market that just addresses just the average, the average investor, the average person that wants to experiment with these assets and actually use them on a day-to-day basis and see from that perspective. And from other perspectives, it's leveling up education on investing and you're seeing more people now, not because of crypto, getting into other types of investing. So, and whereas they didn't before, but it was crypto that actually opened the door for them to get into stock and investing in stocks, investing in, bonds, all kind of stuff. So it's a gateway, it's a reverse gateway too. And I think you see a big market because of that. And that would be in just, like I said, just the everyday, mom and pop person now. Like, what are we going to do for our future? What type of legacy are we going to create? And we can do this through investing, and that's what crypto assets have taught, but we can also get into other things too. So you're seeing I think every market is benefiting from this, crypto explosion.
And that's a great point to segue to. What are the other kinds of enterprises or other kinds of investments that are being made? So recently we saw MicroStrategy, MassMutual, and a bunch of other enterprises that are investing in crypto as a reserve asset. And you see PayPal, Square, and a bunch of others accepting Bitcoin and other blockchain-based payments. So what is it that these kinds of businesses are doing? What are they looking for? If you are a business like them, what should you be looking for? Any thoughts there? Ambre, you're on mute. Oh.
Yeah, sorry. Yeah, I'm happy to give a view here. And I think I fully agree with Christine in the fact that Bitcoin was a low-hanging fruit in terms of let's start with Bitcoin, because Bitcoin is simple, right? You have a Bitcoin, you can send it, you can receive it. That's pretty much the only thing that can happen. And it has a limited supply. Monetary creation is kind of very algorithmic and very clear, how many Bitcoins are mined every block, blah, blah, blah. So the narrative around Bitcoin as a store of value is relatively simple. And I think that was a very good way for investors to dip their little finger in there and say, okay, now I actually need to understand the technology because I can't seriously invest in something that I don't understand. And investors love this notion of fundamental intrinsic value. And so they had to say something to their own LPs saying why do you invest in this? Because this has intrinsic value. What is it? Okay, it's the technology, the censorship resistance, the decentralization aspect, everything. So it was a great way for investors to understand Bitcoin and understand thus blockchain. But I think we often overlook, and it's funny, we have the 80-20% rule applied to Kaiko. So we cover 70,000 crypto asset instruments globally, over 100 exchanges in the world. And 98% of the demand is for a Bitcoin dollar. So it's we definitely see, and this is because we address a very institutional market. We're clearly a B2B API based company. But anyway, I think sometimes I feel sorry because I think Ethereum deserves a place in the spotlight, or however it's called. Why? And I'm going to share a very retail experience that showcases why Ethereum is so powerful. I had, during the crazy ICO boom of 2016, bought some shitcoins, right? Like pretty much everyone probably around here. And I realized that those shitcoins were today worth about 10% of what they were worth when I bought them. I was like, okay, I'd rather just sell them out now before it's worth zero. So I went on a decentralized exchange. I found a market for my shitcoin, and I said, okay, I'm going to transfer that coin to my wallet on the exchange, and then I'm going to place that on the market. And so everything went fine. I transferred my coins. They were credited to my trading wallet on Uniswap. And then I was about to execute the transaction. And it said, oh, you can't run this contract because you don't have ETH on your wallet, so you can't pay for gas. And at that point, it was really a non-issue because I had ETH somewhere else and I transferred like whatever I needed and then I did my transaction. But what it shows is that this entire exciting thing that we call DeFi runs on Ethereum. And Ethereum is basically the actual unit of account, the ETH, is what you need in order to be able to interact with this world and this decentralized finance world. And so it's actually incredibly powerful. We keep getting excited about decentralized finance, but if you don't have ETH, you cannot interact with this world at all. And that is huge. And it's funny because I talk to clients, they're big, regulated entities that are deploying millions in this space, and they only go into Bitcoin. And I'm like, the huge transformative asset that is actually leveraging blockchain as a technology to change the way we do things is Ethereum, and it's completely overlooked by most investors, which I find incredibly surprising. So I don't know if Christine or B, you have a different view from clients when you talk to them, but I always found that very surprising. And we're talking to really smart people.
Can I respond from the corporate's perspective, though? Since Karen asked about that, I think that the Fed is buying $80 billion of Treasury bonds and $40 billion of mortgage-backed assets per month. So there is, if you're a corporate and you have a cash on your balance sheet, you can explain the idea, and you can actually probably take kind of peace in the fact that you're allocating some of that to Bitcoin, because that is the use case really for Bitcoin, is more store of value and the anti-inflationary aspect of Bitcoin, whereas for Ethereum you don't really have that. So I think that corporates will continue to look to Bitcoin for that. And again, to quote ARK, because this report just came out today, so I just read it this morning, they estimated that if all of the companies on the S&P 500 allocated 10% of their cash to Bitcoin, that would be worth $400,000 in Bitcoin's price. So even 1% is $40,000. So I think that Bitcoin in a inflationary environment, which we are, the Fed is saying we are purposefully in right now, I think that you'll continue to see corporates allocate to Bitcoin.
So to add to that, we have a question from the audience. What other financial advisory firms, besides Fidelity and BlackRock, are aggressively exploring adding new digital assets to their investment platforms? Of those that are, what are the key drivers? Is it capturing share in a younger demographic, providing products for macro hedges, etc.? Any thoughts there?
A lot of it is response to client demand. So, we offer our technology to other financial institutions on a sub-custody basis. So we would act as a sub-custodian for Bitcoin for other institutions. And since the OCC announced, midsummer that it was okay for banks to hold digital assets on behalf of customers, there has been a steady stream of interest from traditional financial institutions around holding digital assets, specifically Bitcoin. So underscoring Angie's narrative, look, Bitcoin is really easy for them to understand. And going back to what Ombre was asking, 99% of what Fidelity hears from clients and from the folks that we interact with has been Bitcoin traditionally. We're now starting to hear a much more constructive narrative around Ethereum, and we intend to add Ethereum in the coming months. So,
okay, good. Okay, and so keep the questions coming. I did want to switch now to talk about some of the associated risks, and in particular, security risk considerations when you're making an execution option. Given the recent hacks, and we've all heard about SolarWinds and a number of other related breaches, and certainly there's no scarcity of breaches in the blockchain world. We've seen exchanges and other institutions look at security more closely. And we could talk about mobile security, since that's an area that I'm a bit more familiar with, given my experience at Appdome, since so many apps now are primarily used on mobile devices, not only by consumers who are trying to get, say, Bitcoin or Ethereum, but also employees of the companies, of the institutions that are serving new institutional customers. So if we take the consumer perspective first, right? So you have exchanges now, and top exchanges we know are preventing break-ins to the app, tampering with the app, preventing hackers from copying the app and then using that, for their nefarious purposes. We've seen these exchanges for this consumer use case also add encryption of all the data so they can have, so they can ensure that private keys aren't swiped or that data is used to social engineer different attacks. Now, switching gears and looking at the institutional perspective or enterprise perspective, we've seen how employees might have a Salesforce app on their mobile device to, track their institutional customers. Now, that app could be a target for hackers to get data about institutional or their enterprise customers. So just one to understand, and maybe Christine, you could start off with just how are institutions dealing with this. Tavana, we talked a little bit about this in terms of the retail side, how are retail exchanges dealing with, just wanted to hear your high level thoughts here.
Yep. So really high level. Look, this is non-trivial to us at Fidelity. I mean, quite honestly, aside from what we do in digital assets, we are responsible for over $8 trillion of customer assets. And so arguably, I would imagine that we are a consistent and pretty sizable target. So we've invested heavily both in our cybersecurity infrastructure, but also the risk management and the policies and controls that surround all of our operations. So look, in order to add an app to my phone, it takes pretty much an act of God. So the level of control that exists in most of these large organizations to prevent and help, kind of diminish that activity is absolutely substantial. So a significant investment with respect to not just cyber and mitigating multiple threats, but thinking about how we can ensure that our employees are resistant to things like phishing attacks, spear phishing attacks, or so we're constantly vigilant. So this is part of the fabric with which we operate. And this is another reason folks kind of trust both the brand of Fidelity and how we enact that in practice. So and I'm going to bring up my favorite topic, and Angie knows that I will bring up this topic. Look, I think you look for your counterparty to have, fully audited procedures from a notable audit firm, and that's something that can be a vote of confidence and can help offer someone peace of mind as well. So I'll end it there.
I think from an exchange perspective, now that the exchange arenas are being thoroughly cleaned out, I think that, and now that they're becoming literal banks and the regulations are definitely cracking down, the exchanges are now passing on the higher level securities to individual firms that are dealing with that. So they're now moving everything off base from an exchange onto another type of technology partner. I mean, you saw that, of course, when exchanges stopped holding people's wallets and passed them on to secure wallets like BitGo and services that actually hold their wallet elsewhere. So I think that with exchanges now, you'll see them just moving most of that responsibility off and not having to personally deal with the liabilities of their customers. And of course, because the customers at some exchanges, i.e., which is not even an exchange, Coinbase, don't even have a real wallet. So that's just a bank, So they're falling back on just bank procedures now and becoming an official, maybe federal level one day bank. And just not taking on those responsibilities anymore, because I mean, we all knew it in the early days when exchanges, anybody could have an exchange, and they were not qualified to have exchanges, and they knew nothing about the technology to run an exchange or to provide security. So all of that is changing, and they're not learning. They're just passing that off now you have other industries that are coming in that are providing bank grade security for the back ends of these exchanges. And not only that, of course, they're providing even more important centralized features of insurance to the funds.
Okay, so thank you for that. Want to shift now to your predictions. Also, please share what investments you're most excited about? I know, Angela, we talked about NFTs, and I know everyone else here, B and Tavana, Ambre, and Christine, you guys have your predictions on what's going to happen. So just please share, what do you think is going to happen in 2021? And where's the market going and why?
I guess I'll pick up just on what you mentioned, which is, non-fungible tokens and kind of merging onto the highway of the metaverse, I think is finally happening. I've been, working with a lot of video game companies and digital asset companies, and was excited about art, crypto art, really more as a hobby. And I bought a lot of crypto art, which has been fun. I haven't sold any, but I can see behavior changing in that people are building out their spaces online, and they want to create their identity around them. And so I think that trend is really here to stay. And I also think that, full disclosure, obviously I'm, advisor to Web3 and Polkadot. And I think that interoperability protocols really are going to accelerate this in the same way that kind of this, the TCP/IP layer of the Web 2.0 internet allowed for kind of an explosion of apps on top of it. I think we've been missing this interoperability layer. So I think that coming into play this year, along with digital assets, we can really start to see these economies happening in the metaverse.
Well, I personally predict that a lot of the technology that was created 3 years ago is now finally going to be able to get a stage this year and beyond, especially in regards to the decentralized internet. I mean, that's, I think, probably one of the most important things to just the average person nowadays. With all of the antitrust, social networks, social media, I think that we're going to be quickly moving fast towards the decentralized internet and anything to do with the decentralized internet. And that, of course, is going to, again, open up a world in digital assets, especially pointing towards altcoins, because most of the projects out there that dealt with the decentralized internet have altcoins available as well, that just been sitting in the wind waiting for their opportunity. And now their opportunity is opening up. So I think the moving from one big behemoth, which is what Bitcoin is doing, Bitcoin is moving towards the behemoth, while there is the anti-behemoth, which people are moving towards as they're moving away from the internet. So I think you're going to see a lot more just decentralized projects take off because of what's going on in the internet.
Yeah, and I'll just basically just summarize what I said earlier. Is I'm super bullish on Ethereum in general, because most of the projects and all the decentralized internet runs on Ethereum today. I know there's a lot of challenger chains, but still today, all the ERC20 tokens are out there, are what's building and bridging those kind of more consumer-oriented products today.
All right, I'm most encouraged by, look, I think that there's anticipation over the seats changing from a regulatory standpoint, particularly in the US. And I do think we are going to see some constructive regulation coming out of the major agencies. I think we're on a good trajectory. I actually think we're going to see news that you can use from the regulators.
And on the regulatory standpoint, we've had, that goes back to kind of what we said in the introduction around the institutionalization of the space. We've seen a significant transformation of the types of requests we were getting for data. Originally, we had a lot of smaller crypto funds that were really approaching kind of from a quantitative perspective, the industry. And now we're getting a relatively large number of requests from traditional regulated entities for what we call valuation data. So valuation data is a price that you can use to value your daily NAV, to report to auditors, to report to tax authorities. And so we're having increasing number of conversations with clients that need end of day closes and transparent, reliable, auditable data in order to value assets. And we're within that respect. We're talking to regulators, we're talking to the SEC, we're talking to the French regulator, we're talking to the big four kind of audit consulting companies that are auditing crypto businesses that hold crypto assets. And it's very hard to get a 31st of December close for the value of their net worth if you don't have a reliable, price points that you can use for those specific needs. And this really shows how the industry is transforming, is the nature of businesses that needs data are regulated entities now, and regulators are interested in them getting their hands on clean third-party data that can be audited if need be.
And I think just from my perspective, continuing the education theme that I started with, this sort of run feels a lot different than 2017 because there's a lack of like the frenetic energy that was around, like, oh my God, I have to get in, I need to get this ICO now, I need to get Bitcoin now. Like, that's not here. The education level is a lot higher. People understand, like, okay, if I buy through PayPal, I actually don't have the coins, I cash in or cash out. I don't know if that's, some people want that. Maybe I want that. But like Tavonia was saying about, like, what does it mean to own this? Like, what if I want to have this Bitcoin and I want to hold it in my own wallet? I need to figure out a different way to buy it, right? And I feel like that's a little bit more sustained. The conversations we're having with our counterparties, they tend to be less like investors and more people who are actually trading and like, okay, so if I want to start trading in the DeFi world, to Ambre's point, I need to have a significant amount of ETH because the price of gas is really high. So let me make sure that I have enough there. Or like just the thought process around that is fundamentally different. So I feel like this market is going to stay strong for a longer period of time. Apart from that, I'm not in the business of predictions, so I ain't going any further. But like,
and so we do actually have a question from the audience that I think you could address, and that is, trading, what is OTC trading, and effectively, how is that different from, trading on exchanges?
Sure.
And, yeah.
Yep. So OTC trading is off exchange. So it's the opposite of trading on an exchange. And one of the points that Ambre made earlier, basically the main reason is if you're trying to buy a coin that's less liquid, so there's not as much depth, there's not as many people trading it on exchange. If you put a $50,000 trade on there, the slippage idea that she mentioned, so you might see a price on the exchange of $10, right? But you put a large trade on there, if you're buying it, you could get filled at $20, and if you're selling it, you could sell it at $5. So that slippage is huge because there aren't enough people trading it. So that's one of the reasons someone would use an OTC desk, because if you come to me, that's not going on an exchange, right? You come to me, you ask me for a price. I'll give you a price. You can tell me, that's the price of the century, I want that. Or, no, B, you're out of your mind, I'm going to Christine, she's got a way better price than you do. Or you can be like, all right, Tavonia gave me this price. Can you match it? Because if you can, or you can do better, I'll trade with you. So you can negotiate. But none of this is on the exchange. None of this data is going to Ambre. She's not seeing any of it. She might see me if I'm laying off my other side on the exchange, but there's no record of it. It's not going into any of that data. So it's a direct, basically it's a direct trade between my company and you, two counterparties, not on exchange.
Great. And one last question as we end this session here. What are your thoughts on the Coinbase IPO? Anybody have any comments, thoughts? No. Okay. All right. Well, then.
I'm holding my tongue because I'm not a fan of Coinbase, but so that's why I'm holding my tongue. I'm not a fan. I'm not going to push anybody that direction, but.
Okay, we will then leave that for an offline discussion. Well, thank you all very much for your time today. It's been very helpful and just super enlightening for me personally, even though I've met you before and talked to you before. I just always am learning new things from you all. So thank you so much for sharing and being so open and honest. And I hope you guys all in the audience come to our next event. We will have the Federal Reserve Bank of Boston and MIT discuss central bank digital currencies and the technologies they're considering and using. So thank you all for attending today's session. If you know of anyone who's interested, we will have a recording and put that up on our YouTube channel. But again, thank you for sharing your day with us.
Thank you.
Thank you, Karen.
Thanks, everyone.
Oh, y'all were great.
Okay to ask
Thank you, ladies.
Yeah.
I was just wondering if you could make the next session a little more interactive and we can actually ask questions if it's possible.
Oh yeah, they're all in the, so if you ask, if you want to ask any questions, just ask them in the chat.
Oh, and also, when is the next event that you said the MIT and Federal Reserve of Boston?
Oh, that will be February, I think 17th. I'll send out an invite, or we'll send out an invite on that soon. So
Is
if
it
you
going to
register,
be approximately at the same time?
yes. But we'll have that one recorded too. So we will send that out.
Are you in a rush, or can I ask you a question that I was going to ask and didn't? If you're in a rush, it's okay.
Yeah, so yes, absolutely. We don't have the other panelists on, so it'll be.
That's okay. It's sorry, but I was just wondering. So, Caitlin's Avanti Bank, how is it any different from an exchange that they were claiming to be a bank?
Oh yes, okay. So
do you want to turn off the recording so you don't have to?
Yeah, so why don't we, Marzanne, have you stopped the recording and then we can just.
Yeah, we could just.